Right now, the U.S. stock market is facing one of the biggest battles in recent years. On one side, artificial intelligence and tech spending are pushing the market higher and higher. On the other side, oil prices are spiking because of tensions in the Middle East, which could bring inflation back and hurt the economy. So the big question is, which force will win in 2026, AI or oil? And what does this mean for your investments, your job, and your daily expenses? In this video, we will break it down in simple terms so you can understand what's really happening and what you should do about it. Chapter 1. AI Boom. How strong is he now? Artificial intelligence has been the main driver of the stock market for the last 2 years. Companies like Nvidia, Microsoft, Google, and others are spending billions of dollars on AI technology, data centers, and chips. This spending has created huge profits and pushed stock prices to record highs. Many investors believe AI will keep growing for many years and will make companies much more productive and profitable. Because of this optimism, the stock market has kept rising even when there are other problems in the economy. The AI boom is real and powerful, but it is not the only story right now. Chapter 2. Oil Crunch. Why are prices going up? At the same time, oil prices have started rising sharply in 2026. The main reason is growing tensions in the Middle East, especially around the Strait of Hormuz, which is a very important route for oil tankers. When there is conflict or the risk of supply being blocked, oil prices go up quickly. Higher oil prices mean higher costs for gasoline, transportation, manufacturing, and almost everything we buy. This directly pushes inflation higher. Even though inflation had been cooling down, rising oil prices can bring it back up again. This creates a big problem for the Federal Reserve and for normal people who are already feeling the pressure of high prices. Chapter 3. Their Clash. The Impact on Inflation, Stocks, and Your Money. When AI spending pushes the economy up, but oil prices push inflation up at the same time, the Federal Reserve faces a very difficult situation. If the Fed cuts interest rates to help the economy and stock market, inflation might rise again because of expensive oil. If the Fed keeps rates high or even raises them to control inflation, borrowing becomes more expensive and the stock market can fall. This conflict affects everything: your mortgage rates, car loan rates, credit card interest, gas prices, grocery bills, and even your retirement savings and stock investments can all be impacted. The market is basically stuck between two powerful forces pulling in different directions. Chapter 4. Bull Case versus Bear Case. Simple Scenarios. Let's look at two possible scenarios for the rest of 2026. In the bull case, AI keeps growing very fast. Companies make huge profits and the economy stays strong enough that oil price increases don't cause big problems. In this case, the stock market can continue rising, and many investors do well. In the bear case, oil prices keep rising because of ongoing conflicts. Inflation starts going up again. The Fed is forced to keep rates higher for longer, and economic growth slows down. In this case, the stock market can correct or even enter a bigger downturn. Both scenarios are possible right now, and that's why the market feels so uncertain. Chapter 5. Practical advice. What should you do now? So, what should normal investors and families do in this situation? First, don't panic, and don't make big changes based on headlines alone. Second, make sure your investments are diversified. Don't put everything in AI stocks or in one sector. Third, if you have high-interest debt like credit cards, try to reduce it because higher rates or inflation can make it more expensive. Fourth, keep some cash or short-term investments ready in case there is more volatility. And finally, focus on long-term goals rather than trying to time the market perfectly. The people who do well in uncertain times are usually those who stay calm and stick to a simple plan. The battle between the AI boom and the oil crunch is one of the biggest stories in the U.S. stock market right now in 2026. Both forces are real, and both can affect your money in big ways. Understanding this conflict helps you make smarter decisions instead of getting scared by every news headline. Whether AI wins and the market keeps rising, or oil prices create problems and things slow down, being prepared is always better than being surprised. Thank you for watching this video. If you found it helpful and clear, please like it and subscribe to the channel for more simple finance explainers every week. In the comments, tell me what you think. Do you believe AI will keep driving the market, or are you more worried about rising oil prices? I read every comment. I'll see you in the next video. Take care.